High-growth brands use partnerships 3 times more than others. In 2015, I received what I thought was a prank call. The CEO of my biggest competitor wanted to meet, and my first instinct was to hang up and order another flat white. But that absurd meeting in a Manchester Starbucks led to a partnership that boosted our revenue by 400% in 18 months and transformed us from commodity providers to luxury market leaders commanding premium pricing. Here's what most CEOs get catastrophically wrong. They think their biggest competitor is their biggest threat. But what if I told you that your competitor could actually be your biggest win? Your gateway to accessing ultra high net worth clients who pay premium prices without batting an eye. Stay with me for the next few minutes because I'm about to reveal the 8 partnership multipliers that transformed my business and how you can use the same framework to stop competing on price and start commanding luxury pricing in your industry. I'm David White, and over 4 decades of building businesses, I've learned something counterintuitive. The companies that dominate premium markets aren't necessarily the ones with the best products. They're the ones with the best partnerships. Consider this: 75% of world trade flows through partnerships and alliances. Strategic partnerships contribute to 28% of high maturity companies' revenue, compared to just 18% from paid search. And here's the kicker: 95% of Microsoft's revenue flows through its partners. This isn't theory. This is how empires are actually built and work in today's modern economy, and has done for many decades. This is, most would agree, counterintuitive about competition. So this is the truth that most business leaders miss. Your biggest threat can become your greatest asset for accessing high-end, discerning clientele who value exclusivity over price points. Reid Hoffman, LinkedIn's founder, said starting a company is like leaping off a cliff and making a plane as you drop. But here's what he also noticed: you can share parts with others jumping from the same cliff. The Manchester meeting I mentioned, it challenged everything I thought I knew about competition at the time. We weren't just collaborating, we were creating an entirely new market category where both of our brands could command premium positioning. 8 partnership multipliers framework. Let me share the 8 multipliers that turn partnerships into engines for growth. Multiplier number 1, the competitor collaboration paradox. Transform market threats into luxury assets through strategic alliances that elevate both brands to prestige positioning. When 2 prospective brands align, they don't just add value, they multiply it. Multiplier 2, the expertise exchange economy. Share domain specialization to gain access to affluent customer networks and premium distribution channels built over decades. Your expertise becomes their gateway. Their network becomes your highway. Multiplier 3, the distribution amplification engine. Access established trusted networks serving discerning clientele who value relationship-based recommendations over mass marketing. These aren't just customers, they're communities of influence. Multiplier 4, the risk redistribution model. Share investment risks while amplifying upside potential in high-stakes premium market entry. 2 companies taking calculated risks together often outperform one company taking a desperate chance alone. Multiplier 5, the credibility transfer protocol. Leverage established authority and industry recognition to fast-track your brand's entry into luxury market segments. Credibility isn't built overnight, but it can be borrowed strategically. Multiplier 6, the innovation acceleration catalyst. This is where you transform partnership meetings into treasure troves of cutting-edge ideas and bespoke product innovation for discerning customers. Innovation happens at the intersection of different perspectives. Multiplier 7, the market intelligence network. Use strategic partners to gain early insights into emerging luxury trends and ultra-high net worth customer behaviors. Information is power, but shared information is exponential access to power. Multiplier number 8, the compound growth generator. Build systems where each successful premium partnership becomes a stepping stone to even more exclusive, high-value relationships. Success breeds success, but strategic success breeds empires. So why this matters now? The companies that implement these multipliers don't just grow revenue. They ascend to entirely new market tiers where price sensitivity disappears and customer loyalty becomes generational. I've seen this firsthand working with luxury brands like Cartier and enterprise clients like Adobe and IBM. The strategies that work aren't the ones taught in business school. They're the ones forged in the real world of high stakes partnerships. While your competitors fight over price-sensitive customers in a race to the bottom, you can access affluent segments through collaborative relationships that elevate everyone involved. The implementation reality. Now, I need to be honest with you. These 8 multipliers form the foundation, but premium market entry requires sophisticated execution. And there are 4 fatal partnership patterns that kill 70% of luxury market partnerships before they even begin. There's the Premium Partnership Success Protocol, which is a systematic approach to evaluating, negotiating, and implementing high-value alliances. The Partnership Architecture Framework for structuring partnerships that maximize prestige positioning. And there's the 90-day Premium Partnership Playbook with tools and templates for building authority enhancing revenue multiplying alliances. This isn't about sharing profits. It's about expanding into premium territories where margins are higher, customers are more loyal, and your brand commands respect rather than competing on price. The choice before you, the difference between competing for market share and creating new luxury market categories, lies in strategic partnership execution. You have a choice. Continue fighting for scraps in commodity markets or ascend to the prestige tier where true wealth is built. Your network determines your net worth tier, and it's that simple and it's that profound. If you're ready to transform your business from commodity provider to luxury market leader, I want to help you implement these strategies in your specific industry. The conversation continues at my Substack, theauthorityfigure.substack.com. That's where you'll find premium levels of additional content, including the complete partnership multiplier framework, case studies from my 4 decades of experience, and the strategic insights that most consultants charge thousands for. Or if you want personalized guidance for your premium market entry, book a complimentary authority assessment call with me. We'll explore partnership opportunities specific to your industry and growth objectives. You can book at a time that suits your schedule via my Calendly link, and the link is in the notes near this video. Limited slots are available to ensure valuable, focused discussions, because I work with clients who are serious about ascending to the prestige tier. Remember, a CEO crafted this content for CEOs. It's designed to help you save time and increase profits through proven strategies. The returns can be significant even if you implement just one of these today. Your competitors are building moats. Smart CEOs build bridges. Which are you going to choose?